Welcome back, investors, to Ticker Time News. I'm Adam. And the stock market, it pushed a positive bias for the entire session today, but remained in a narrow trading range. And that was until the last 30 minutes of trading, where the major indices pushed to new session highs. Did somebody know something about tomorrow's speech from Fed Chair Powell that the rest of us don't know about yet? It's like today's buying was fueled by an emerging hope that Fed Chair Powell's comments tomorrow regarding the rate hike path will align with what market participants want to hear. I mean, how often does the market do exactly what you want it to? Not very often. Now, there was another supporting factor for why today's buying effort kicked off as it did. The 10-year yield, it moved noticeably lower. More on the Treasury market in just a moment. Mixed earnings since yesterday's close was met with mixed price action. If we look at Salesforce, ticker symbol CRM, and you can follow along at home with the charting, there's a link in the description to TradingView. Click on it, sign up, doesn't cost a penny. But Salesforce down 3.4% today. It was a limiting factor to the Dow after it reported disappointing guidance. And another disappointing result in today's after-hours movement was Affirm. Ticker symbol is AFRM. Affirm, the buy now, pay later lender, it issued Q1 and fiscal year 23 guidance that trailed Wall Street's expectations. And once the chart loads here, give it a second, it's down 14%. Down 14% in the after hours because of this disappointing guidance and miss. Now, Affirm's fiscal Q4 gap loss per share, it was wider than expected too. So it just piled on for Affirm, and not in a good way. Maybe they can get themselves out of this because the trend had kind of reversed here since their lows last quarter when they reached a bottom. But now, I don't know. If the economy doesn't do so well and we do go into a full recession, which more on a questionable paper recession in just a moment too. We have some refreshed numbers, the second GDP estimate. Maybe Affirm can do better, but not unless the economy does better first. Now, other growth stocks in the market today, they got a big boost from the drop in the 10-year yield and some relatively impressive results from Snowflake, which is becoming a growth powerhouse, even in an economy like we're in today. Their ticker symbol is SNOW, SONW. They were up over 20% just today. The data warehousing company saw continued strength in product revenue in its second quarter earnings report, allowing it to top estimates and also raise its full year guidance. That's something that we aren't seeing very much of from many companies. But it too, since last earnings, found itself a bottom somewhere around the June 14th timeframe, and it's been in this ascending trading channel since then. Today, boom, it just went from the bottom of that channel all the way to the top of that channel, busting out of the top of that channel. And I'm sure it'll settle back down within it over the next few days, unlike Nvidia. But, with continued weakness in the software sector, you would think Snowflake would also see weakness, even though it's not technically software. But I think this shows that Snowflake being able to sustain 80% growth in product revenue, it just shows how important the company's platform has become. And I think that's a really good thing for Snowflake. So it's worth looking into if you haven't already. Now, Nvidia, we went over this yesterday, NVDA, when their earnings came out. And it wasn't all too spectacular. However, something seemed to have changed today. Let me get these marks off here from yesterday so we can see this a little clearer. But up 4% today after what seemed to be a disappointing earnings yesterday? Yeah, doesn't make too much sense. I think this is one of those situations, you can see it there, it bottomed out leading up to its earnings, the big drop from Monday, and its 4% rally today took it right back nearly to the lower end of its weekly expected move. Now, Nvidia, it fell below expected Q3 revenue guidance, and that was met with buying interest. Again, a jump of 4% today. It seems like some market participants saw the weak guidance as an indication that the bottom is near for the semiconductor industry. Now, I do not subscribe to that thinking. I think there's still more pain to come. But is this just the market seeing and hearing what it wants to and not the actual reality? It makes me wonder. But I did like these gains. I can't say I didn't, because the Van Erik Semiconductor ETF, the ticker symbol is SMH. We do weekly expected moves for this subsector too. It gave us a nice 3.4% gain today. Really good. I think it may run into a little bit of problem here when it comes to its 20-day moving average, which sits about 237, and it's at 235 right now. So just a few dollars away from that. But it is now kind of right in the middle of that weekly expected move. Again, that data is spot on. It's almost like having a cheat code or secret numbers at the beginning of the week, knowing where these products can go by the end of the week. It is really fascinating. And we do 30 to 40 different products every Sunday evening for our investor community on Patreon. Click the first link in the description if you would like to get these, quote, cheat codes for the market. All right, the positive bias today, it left all 11 S&P 500 sectors in the green today. Let's pull up the sector chart here on the right-hand side of your screen. You can see all that beautiful green. The only red on this chart is the dollar and the VIX. That's it. The dollar was red today, but not big time red. Like the markets took off, especially in the last 30 minutes of trading. The dollar, not so much, down 0.2%, while we had the S&P 500 up over a percent, a full percent. So again, something about the end of the day today. And then the VIX, it was down 4.5%. It's still above 20, 21.7 is where it ended the day today. Now, the gains today ranged from 0.5%, consumer staples, ticker symbol XLP, to being up 2.3%, the material sector. That was a surprise to me. And that's ticker symbol XLB. Now, the risk on tone had defensive sectors like utilities, XLU. It was still up 0.6%. And consumer staples, ticker symbol again, XLP, up 0.5%. And healthcare, XLV, up 1.1%. They were trailing the broader market, even with those gains. And then energy. Energy was up 0.8%. XLE is the ticker. Also fell towards the bottom of the list amid falling oil prices. Yeah, oil prices fell today 1.9%. We can look at that. U.S. oil, easy ticker symbol to remember on TradingView. Look at this. It fell, however, it held above its 5-day EMA, the most frequently tagged moving average there is. And yeah, I get it. It's a short moving average, but it's often one that can give you a heads up on where the trend is heading. And right now, the 5-day EMA was ascending. Obviously, oil has been on a run, since the 16th of August up to today, the 25th of August. And that ascending 5-day EMA held as support right at the close for oil. Could that be a sign that oil is finding some support around this $33 a barrel possibly, that price point acted as support. It's acted as support in the past. Could it act as support here in the future? Well, watch it closely. 93. Now, the Treasury market. Boy, oh boy. The Treasury market was mixed today, to say the least. The 2-year, let's pull that one up. US 02Y. The 2-year yield, it rose 2 basis points to 3.39%. Yesterday, it just completely took off, breaking above the resistance that's been holding now for a couple of months. We don't want that. We don't want the 2-year breaking above that resistance and moving higher, because we want the yield curve to become uninverted. Is that the right term to use? Uninverted? We don't want to see the yield curve inverted any longer. It's not a good thing for the financial sector, and it's not a good thing for banks in particular. You know, banks, they don't like it. They don't like it at all. And with the yield curve being inverted, it's always been a sign of a recession. Maybe this time's different. Who knows, right? This market is doing whatever it wants to, completely different from historical precedent. Now, the 10-year, it fell today by 8 basis points. It's still above 3%, though. US 10Y. The 10-year is at 3.03%. Okay. You can see it has been on a tear too, also rising, pulling back today, but it stayed above its own 5-day EMA, just like oil. So this is interesting. Is this a support area for the 10-year yield? It could be. How's it going? What happened? Are people really bullish going into this? I think this market it's seeing what it wants to, it's believing what it wants to, and it's throwing any sort of rationale, common sense, just completely out the window, and not living in reality. I just don't see it. Now, like I said at the very beginning of this live stream, there is something interesting that took place today, and that happened in the last, let me pull up the SPY here and we can see this. The last 30 minutes of trading today, there was a big spike. I'll pull up the 5-minute chart so we can dial in on this. But it was the last 30 minutes, a spike in buying activity. Look at that. I mean, boom. Straight up. Was something leaked? Did market participants here, know something that the rest of us didn't about Jerome Powell's speech tomorrow? It makes you wonder, because that's happening at the close of business. That's odd to me. In front of a big, big speech. Plus, on top of that, let's add this into it. Several Fed officials have commented very hawkishly about the economy. They've also made comments that the Fed has more work to do on fighting inflation. Even St. Louis Fed President Bernard, who is an FOMC voter, for one, thinks inflation could be more persistent than many on Wall Street expect, and that this risk is underpriced in the markets, meaning that the market's valuation needs to come down. The risk is not priced into the market. That is directly from the mouth of a voting FOMC member. That doesn't give me much hope that, hey, things are going to be good. And if Biden's student loan forgiveness of the $10,000 up to $125,000 salary income, or if they're married, I think it's $20,000 if they file jointly, wiped off of their student loan. While I do agree something should be done about student loans, the government is a very predatory, I think, in that sense. But this is going to cause inflation to creep up. Spending anywhere from $300 billion to $500 billion, that's not helping to fight inflation. So I'm a little torn on that whole deal with Biden. I don't know. I think maybe cutting off the interest rate and making sure people pay back the principal, inflation maybe has something to do with it. Maybe that's a better idea than just giving out 10 grand. Anyways, that's a political topic, and we're trying to keep it financial here. Well, I guess it is kind of financial, isn't it? Especially if it's going to affect inflation. So Fed officials all week have been talking very negatively about the market. That's my point. About the economy, about inflation. And we had another Fed official say, what if inflation hasn't peaked yet? It makes you wonder, what happened here in the last 30 minutes of trading? I cannot imagine the market being this bullish ahead of Powell's speech tomorrow. I just can't. And we know that the summer rally that we had, it was front run by the belief that the Fed would pivot sooner than later. I don't think the Fed is going to pivot anytime soon. The Fed pivoting is going to be much further out, not sooner. It's going to be the later. We have the evidence in front of us. We've got the evidence. Now, speaking about tomorrow in the Fed, yeah, and everyone is going to expect a handout in the future too. Amen. Absolutely. Absolutely. And, just think about, back on the topic of student loans. What about the people that didn't go to credit? Oh my goodness. Did not go to college. Maybe they had another path in mind. They're going to end up paying what was the estimate? Americans are going to pay about $2,000 in taxes to cover the $10,000 credit for the highest earners in America, which are college graduates. Yeah, that's tough. Those who took a different path. I'm not saying that college is the only path. I think there are multiple paths that people can take to have a happy, successful life. Okay. Off of that. Either way, I bought puts and calls. Yeah. Right before Nvidia earnings for cheap. Okay. Good. Yeah, Nvidia, it creeped up today, and I don't know again why. I don't know why. And market participants think that weakness is a sign of the end of weakness. I mean, yeah, if you had other factors to go with that, sure. But weakness is the end of weakness? I just don't know. On the SPY, not Nvidia. Gotcha. Yeah, those calls would have been nice on Nvidia today. So speaking of the SPY here, if things do pop off in the negative for tomorrow, the 400 to 395 area on the SPY, I think that is an interesting area. If we plug in 400 and see, it kind of goes right through here like this, and then it kind of comes through this spot right there. I think that would be an interesting spot if we were shooting down negatively in the market. I think there could be some support there, and I think, and the big reason for that is the 50-day moving average is creeping up to that area. Right now, it's at 398, so it's almost to that 400 mark. I think that would be an interesting area that if the market did start to fall, I think that would be an area that could catch it from falling even further. So, yeah, we'll see what happens tomorrow with that. The island topping pattern, even with today's move, it still holds. The island topping pattern that we talked about yesterday, we have this gap up here, and then we have this gap down here. That's what you want to see. So, the market's going up, and then the market gaps up, and, it can roll over or it can come down sharply, and then it gaps down. That is a topping pattern. It's an island top, and as long as the gap that was left on the way down doesn't get filled, then yeah, it will hold and it can push the market down further. However, if that gap does get filled, then that pattern is invalid, and it was not an island topping pattern. So it all depends on the bounce, the rebound from the gap down, on whether or not that pattern will hold. Just want to point that out. So we talked about it yesterday, and even though we had a run in the market today, it does not, and it did not fill in that gap. It did slightly, maybe a third of the way, almost, maybe 2/3 of the way to a half of the way filling through that gap, but it did not completely close off that gap. So there is still a possibility that that pattern does remain. Obviously, tomorrow's price action will be a deciding factor in that. So yeah, there's my quick thoughts on the SPY there. Okay, Friday, market participants will also receive the July PCE price index. The expectation is 0.1%. The prior reading was 1.0%. So the expectation tomorrow is 0.1%. The prior reading was a full percentage point. And then we get core PCE price index expectation is 0.3%. The reading last time was 0.6%. And this is included in the personal income, which the expectation is 0.6%. And that's the exact reading that we got last time around. And then, of course, the spending report expectation is 0.4%. Prior reading was 1.1%. All of those come out at 8:30 a.m. Eastern. And then the August University of Michigan Consumer Sentiment, the final reading for that is going to come out. The prior reading and the expectation are the same, 55.1. And remember, 50 and below, under 50, that is a contracting environment. That comes out at 10 a.m. Now, the big focal point, we've already been talking about it today, after the PCE price index will be Fed Chair Powell's speech. It's at 10 a.m. Eastern at the Jackson Hole Economic Policy Meeting. Now, this market will move as each and every word and how those words are said will be picked apart for clues on what the Fed is going to do. Now, you all know my thoughts on the Fed. I do not see a Fed pivot in the near future. But that doesn't mean the market cannot rally. The summer rally proved the market will see what it wants to, whether it's real or not. They will front run a belief, whether that belief is real or not, whether that belief is based on evidence or not. So the market's being irrational right now. It is being totally irrational right now, my belief. What Jerome Powell is going to say tomorrow is up in the air. But I believe what he's been saying for the past couple of months, maybe the past 3 months now, I don't think there's going to be any drastic change to that. Now, today's economic data, it may play a little bit of a role in his speech tomorrow. Initial jobless claims for the week ending August 20th. It decreased by 2,000, 243,000. Expectation was 253,000. While continuing jobless claims for the week ending August 13th decreased by 19,000 to 1.415 million. The key takeaway is the improvement in initial claims. A reading below 250,000 certainly indicates that labor market conditions remain tight, which means the potential for sticky wage-based inflation pressures also remains tight. And that is unlikely to be a comforting indication for Fed officials, meaning the Fed will not pivot. And then the revised Q2 GDP report showed real GDP decreased at an annual rate of 0.6% versus the advanced estimate of a contraction of 0.9%, with an upward revised consumer spending helping out. The Q2 GDP price deflator, though, was revised up to 8.9% from 8.7%. The key takeaway here is simply the understanding that it was not as bad as first reported. But given its dated nature, we're almost 2/3 of the way through Q3, it cannot be considered a market-moving report. Okay. Let's run through your questions. Man, I ran through this quick today. Only 28 minutes. Usually it's an hour. So if you've got questions on any particular stock, let's look at it. Otherwise, we'll wrap it up. Make sure to do me a favor and click that like button, please. Share this video with a friend and join our investor community by clicking the first link in the description. You'll get instant access to our weekly expected moves on 35, 40 different products, numerous trade setups with 13 to 14, I think today was 16 different trading strategies in mind. Top 10 stocks in 4 different categories like value, growth, dividend, and momentum. Insight on economic data, market insights, all to help you along your investor journey to gaining knowledge to become better traders and better investors. To achieve that financial independence, baby. All right. Let's see here. Do you think the markets will take the weekend to digest what Jerome says? That's a good question. I actually shared with our investor community earlier, I think today and also earlier this week, that the market may actually take from now until the beginning of September, so the rest of August, the time to digest these major moves, the summer rally, all the economic data, and including what Jerome Powell says tomorrow. The market may just move sideways, digest all of this information that we've gotten, all of this data, and then start making some real big moves in September when we get our next jobs report, when we get our next CPI report on inflation, and our next FOMC meeting. And that last one is on the 21st of September. That's when we'll get another rate hike. So I do think the market could take the weekend. And I do think the market could take the next week to really digest this information. And also remember, we're, the end of August here. Maybe there's some last minute vacations. Maybe there's days off to take your kids back to school, back to college, whatever the case may be. And that could have an impact on the market as well. If you notice here on the bottom of the screen, the green and red down here, volume has been decreasing. If we go back to when we hit the low on June 16th, we had 134.4 million trades. 134 million. We get to today, we had 50 million. So volume has come down significantly, which is typical in August to see that. Yeah, I'm keeping both my calls and puts open till the market chooses direction. This is a very tough position to be in for traders because the market is undecisive right now. There is no clear direction that we can glean from charts or from data. Now, we can take our investment thesis that we have put together and we can put the new data that's come out into it, and we can have an idea on where we think the market could be going. But as far as an accurate indication on the charts, there isn't one. Not right now. Sure, we can read things off the charts that are in the short term. Like if we go into the 15-minute time frame here on the SPY. Let me turn those. Let me turn this off real quick. Wrong one. There we go. And we can look here. And we can see the market, for the most part, over the past 3 days, even though it's been kind of flat, it is holding above some important moving averages. But it's getting close to a potential moving average up here to slow things down a bit. RSI, right now, it's getting a bit on the shorter time frame. It ran pretty hot towards the end of today's session because the market just took off for no reason, unless there was some sort of a leak on someone's speech. But RSI is getting a little hot here into the end of the day. But these little indicators, they are no match for the overall trend that this market is trying to go in. And with the market down at its yesterday and the day before, it's fall Monday, and it's fall last Friday, that put it in a short-term bearish bias. But with today's little pop, it puts it into a short-term kind of maybe a little bullish to maybe a little neutral. Just solely looking at the 5-day EMA. It closed above that. It closed above the 20-day simple moving average. So that's that. Also, one other thing I wanted to show, I forgot to, is what market participants believe the rate hike will be in September. Now, this thing has been changing quickly. The bar on the left side of the screen, which is now at 35%, that's a 50 basis point rate hike. The bar on the right side of the screen, that is a 75 basis point rate hike, and that is at 65%. These two bars were completely flipped on each other not that far ago, not that long ago. Let me go down here. 1 week ago, a 50 basis point rate hike was at 60%, and a 75 basis point rate hike was at 40%. That has now flipped. Now, 65% of market participants think that there will be a 75 basis point rate hike in September. And if there is a 75 basis point rate hike in September, this whole bullish rally that we've come through will get wiped out. We'll lose a lot of these gains if that is the case. Because, and simply because, the market front ran a Fed pivot that will not happen. They broke reality. All right. Anything else? Let me know. I'll give you a minute or two to plug them in. While you're doing that, I'm just going to take a look at the dollar real quick because we didn't pull that up. Small caps, they did really well today considering. Technology did pretty darn good today. Man, I can't believe how good Snowflake did. I'm good for now. Thank you, Crazy Market. Yes, it is. Yes, it is. All right. Well, we will wrap it up here. Here's the just real quick on the dollar, ticker symbol DXY. You can see it pulled back, but it closed above its 5-day EMA. So this thing is still, with the 5-day EMA kind of flattening out right there, this is putting the dollar in more of a neutral territory. That 5-day EMA, it came up like this and it's flattening out now. When it's flat, that's a neutral. When it's inclining, that's bearish. When it's declining, that is, when it's inclining, it's bullish going up. Flat is neutral. Declining is bearish. So just throw that out there. All right, ladies and gentlemen, I will see our investor community tomorrow morning. And everyone else, I will see you during the live stream tomorrow after the market has closed. And if you want to join our investor community, just click the first link in the description. A ton of benefits to help you along your investor journey. I find them myself to be very useful, great tools, and that's why I share them. So, all right, ladies and gentlemen, thank you so very much for joining me today. I greatly appreciate it, and I'll see you in the next video. Take care.